The number one trend for 2022 is volatility, and that is in every sense of the word, geopolitically, financially. Looking at the economy, you will see what's happening in 2021 and into 2022. If you are watching this right now, I know that you are on the ball. The first thing we are going to look at is what happened in 2021, because that's going to give us insight for this year 2022. The second thing, what to look for. I'm going to show you all of that. The third thing is the future trends. This is a very big and important video, and I want to go through it as quick as I possibly can. Let's begin. So let's look at 2021 really briefly. I know you know much of this, but I just want to go through it because it's going to lead me to the next part. Global market asset performance. Brent crude oil. Look at that, 53%. Even though we are off the highs, still there. You look at the commodities index, nearly 40%. S&P 500, 29%. And you just go down the list. What didn't perform so good over the year? Gold, minus 4.6. However, fourth quarter, it's 2.8 into the positive. You look at the euro versus the dollar, not so good. You look at the German 10-year bond, not so good. And you just go through all of that, okay? Looking at this, you could see the S&P 500, the Dow Jones, NASDAQ, and so on, all doing very well over the year. They have had their ups and downs, okay, certainly, but they have all really performed well. Throughout 2021, commodities in particular, they notched their best year since the financial crisis. Unbelievable, 27% on the Bloomberg Commodity Spot Index. You could see right here, Shanghai Stock Exchange Composite Index was the worst performer when you compare it to what happened in Europe, as well as the S&P 500. The US, okay? So you see the outlier there in green. Now, some have said that that's the great opportunity for 2022, but that remains to be seen. You look at some of the high flyers, ARC, unprofitable tech names, momentum, SPACs, and so on. You know, they are largely up, but it all depends on where you look at this. Coming from the beginning of the year, you know, you could argue that, but coming from 2020, things look a lot different. Anyway, the whole point is that there is a much different scenario, what we experienced 2020, 2021, 2022, okay? This is going to be a very, very different set of years all connected together. Cryptocurrencies, while they have gained, you can see that there has been big differences. Ethereum has outperformed other major cryptocurrencies over 400% over the year. And it is definitely off the top. You've got oil, okay, at the top here. And then you look at the bottom, gold and silver. Gold and silver have not performed that well in a year in which there's so much inflation, so much chaos, in fact. Canadian stocks close out their best year since 2009, led by energy. So this is very big to understand. That's 2021. I don't want to beat a dead horse. I know you know a lot of that. We need to get into the next part of this, okay? Because we are going to talk about what's going on, what's going to happen. You need to be aware of what to look for. This, the Fed's moves, pumped up stocks. In 2022, it may pull the plug. Great article actually out of the New York Times, believe it or not. It just gets into all the details. You don't have to believe anything they say. Just looking at the detail that they outline is really good. Shares soared as interest rates stayed low and stimulus programs helped the economy, but expected changes could make investors wary. So you just look through here, come 2022, the Federal Reserve is expected to raise interest rates to fight inflation. It's going to be the first time in almost 2 years that the Fed's incremental decisions might force investors or consumers to be a little more wary, because it's all been easy money, easy money, easy money. And now that has changed, right? 2022, very different year. Now you could say, well, the Federal Reserve is not going to increase interest rates. The United States is not going to increase interest rates. The entire world is moving in that direction. They have done this. Some have said, no, they're not going to. I cross my hands here. I'm not going to do it. They are ignoring what has happened in the past. these are cycles. These cycles repeat over and over again. They are always going to do the same thing, repeat the same process. And why? Because they want to create the boom and bust cycle, because it helps them out and their friends, their shareholders out very much. 2021 was a terrific year for the equity markets. Nobody would deny that. Between the stimulus, keeping the economy going, easy monetary policy for the Fed, keeping the markets liquid and interest rates low, and the ongoing medical improvement leading to surprising growth, markets have been in the best possible world, suggesting next year or this year is actually quite different. And as I said in the introduction, volatility is really the trend for 2022. Volatile goes with food prices. That's for sure. I have heard from people all over the world telling me about their food prices rising dramatically. Some have said they're up modestly, but for many, they're up dramatically. Okay, this is just showing you one instance, Kraft Heinz, which I talked about many times before, planning to raise prices on some items by as much as 20%. 20%. That's what they're increasing, whatever the store decides to do. Usually a lot of these supermarkets have actually small margins, but because they're selling, 1,000 bottles of ketchup over a week, they can produce income from that. They could produce cash flow from that. Here you go. Add Cheerios, Wheaties, and Lucky Charms to the food. That will cost you up to 20% more in 2022. Just goes on and on. On top of that, oil and gas discoveries are at the lowest levels since 1946. Watch what happens in any commodity or anything that you buy. Look at where it comes from. Where does it come from? Okay, they've got to mine it. They've got to produce it, manufacture it, and so on. And what's happening with that? Are there shortages? Are they having problems with staff? Are they not able to get it out of the ground? Like whatever the situation is, that in effect will have an impact on you in the coming days and weeks and months and years. And right now, because of what happened with 2020, there was uncertainty. Oh, no, oil and gas are not going to be needed anymore. Everything's going to just disappear. Well, then that changed a lot. It really did. And now you could see very clearly that has had an impact going forward, prices accelerating, unable to get what they need, so on and so forth. What about this? China sends observation satellite into orbit to look for resources on Earth. Number one, this tells you that it is so difficult to find what you need. When you've got to go into the middle of nowhere to try and find whatever it is, oil or any sort of mining or whatever. When you have to go to great lengths, you're spending a lot of money to do so. It shows you it's not so easy to come by. Okay, and at the same time, it shows you that China wants to have a hold on the rare earth elements. Now, many people will say, oh, they don't, have all the rare earths and so on. That is absolutely true, but they are certainly by far the country that is doing the most mining of those elements. And you could say, well, okay, we'll just do more mining. But that doesn't happen overnight. It takes a long time to actually make that happen. Okay, so I just wanted to highlight that. Okay, now getting into the next topic for today. We got to look at these future trends. We got to understand what's happening. And that's what this is all about. Okay, look at this here. We are seeing the rules of interventionism. Say there is no inflation, print. Say it is transitory, print. Blame businesses, print. Blame consumers, print. Price controls and rationing, crisis, print. To combat deflation. Repeat. Do you agree with this? Let me know. Put it in the comments below. If you do think that there is too much intervention on any level, hit that thumbs up button. Okay, you're agreeing with me if that is the case. Not necessarily this, but if there's just generally too much intervention, hit that thumbs up. If not, hit the thumbs down. So that's the trend, I believe, going forward. is that they're always going to be pushing things up, pushing things down. Instead of just kind of standing back, okay, leave it alone, it's more about intervening. G10 central banks tapered or ended asset purchases earlier than expected, and the interest rate normalization process started in Norway, New Zealand, the UK, much of Latin America, and CEEMEA, all right? Different countries all doing the same thing, and that is tightening, or at least less loose, if you want to look at it like that. And it just breaks it down exactly. Goldman Sachs has highlighted it all. I'm not going to go over it, but that's pretty much the message. It's tightening. So who wins in this case here? What kind of companies are going to do well? Well, you stayed, nearly 12 minutes into the video. That's very key to understand who's going to benefit from this. And of course, usually the financial companies tend to benefit when their interest rates are higher. Who doesn't benefit? Growth stocks, tech stocks, okay, because they are basically borrowing from the future to pull it into the present. And so if you don't have a situation of low interest rates, low inflation, well, then things change. Look at what has happened with the NASDAQ. Look at what has happened with growth stocks. America's huge pile of national debt makes combating inflation more difficult. 1 percentage point increase in interest rates translates into a $30 trillion increase in the interest costs on the national debt. That's huge. That's what's going to happen. Of course, they have to increase interest rates. It's not only the United States. They might not be able to get far, but they can certainly do so. This is also something I've been thinking about. Indonesia halts coal exports to secure the domestic supply. So will we have disruptions? Will we be having these disruptions coming about, not just with coal? Is it going to be oil and so on? Suddenly you have countries saying, I know we were doing business. I know this was happening for the last 20 years, but suddenly, no, we can't do it anymore. I think that's big. In 2021, New York's housing market made a stunning comeback. What are the comeback plays? What are we going to see? I think that this could absolutely happen, not New York specifically, but things that were out of favor early 2020 could really be changing into 2022 as you see higher inflation, higher interest rates. Think of those things, okay? Things I've talked about many times. And to finish off the video, Africa's poised for a Bitcoin revolution in 2022. Countries out there that don't have access, like many countries in Africa, many people, I should say, in Africa that maybe don't even have a traditional bank are going to be utilizing Bitcoin and cryptocurrencies more than ever before. The price fluctuating is obviously going to have an impact on that. But I think that a lot is changing within the financial system, and you see that these financial companies that should really and have spoken out against cryptocurrencies have embraced it in a way. Maybe they've set up an ETF, maybe they have a fund and so on. So I think that this is a big trend, cryptocurrencies, at least for some places that don't trust their own currency. They've got to choose something else. Do they want to go fiat? Do they want to go crypto? Do they want to go gold? What's going to be? Well, here you can see certainly an uptake in Bitcoin and other cryptos. I want to see where that goes. I want to know your thoughts. Let me know. Always let me know what your thoughts are. Please post them in the comment section below. I look at as much as I can. All you got to do to support the channel, just click that thumbs up button. That's all I ask. Click that one button. It's right down there. If you haven't seen this video yet, you definitely want to check it out. All right, so just click it and I'll see you there.